So it's looking like we're gonna have a few more banks fail, which is very ironic because earlier this week we had Joe Biden himself tell us that the banking sector was very strong and resilient.
These actions are going to make sure that the banking system is safe and sound. We have to make sure that we're not back in this position again. And I think we're well on our way to be able to make that assurance.
Now you guys might be wondering, why are regional stocks falling? Well, I want you guys to pay attention to what Biden also said.
Well, depositors are being protected. Shareholders are losing their investments.
So when you have the government themselves telling you guys, hey, we really don't care about the investors, we only care about the depositors, the investors could just get obliterated. Well, if you're holding regional stocks, what are you probably gonna do? You're probably gonna be like, I don't wanna hold this anymore, right?
I don't want it anymore.
And so we saw a bunch of regional stocks go down, but it gets even more ironic because just yesterday we had Jerome Powell hike by 25 basis points, which we already knew he was going to do. However, he himself also said how the banking sector was very strong and robust.
Conditions in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient.
And what happened in the after hours after he just said that? Well, we saw more regional banks tank even further down. So with these regional banks falling down, I had to update my bankruptcy bingo card. And guys, I don't want to have to update my bankruptcy bingo card. I do not want to see more regional banks failing. Now, the reason I say this is simply because regional banks have a huge influence on the economy. And the reason why is because of this. I want you guys to look at this chart over here. So as you can see, regional banks have a huge amount of exposure to commercial real estate loans as opposed to the large financial institutions like Bank of America, Chase, etc. So what this means is that if we have more regional banks, collapse, well, we could cause a credit crunch, right? Now, the reason behind this is because these real estate loans, right? These commercial real estate loans, they're non-recourse loans. So this means that they're gonna have to be refinanced sooner or later, and the rates are extremely high. And so these regional banks are not prepared for this. They are not prepared for this. So when it comes time to, refinance all these commercial loans, it's going to be a red wave of pain, which is why I've been telling the Push and Profit private group for a year now that my overarching view on the markets in the short term is very bearish. Now, I know I always say I'm bullish on stocks like Tesla in the long term, and I am, but that is in a 7-year time frame. In the short term, overarching, things are not looking good. I've said in the past to the private group that, the feds are probably going to continue hiking until something breaks, and it's looking like the banking sector is cracking down. It's kind of looking a little bit broken. Now, in the last FOMC rate decision meeting, we heard some dovish comments from Jerome Powell. In fact, he said there is a possibility of a pause. However, I want you guys to know that you can't put too much salt on that because of the way the message was said, right? It was very ambiguous. We had Jerome Powell basically say, hey, if core inflation goes down and the data is looking good, then we could possibly pause. But here's the thing, core inflation isn't really showing signs of going down, and in fact, he's still having hikes on the table. There's a possibility that we may continue hiking, and when that happens, we can see overall, just stocks go down once more once we hear that there's additional hikes. See, everyone's kind of conditioned to believe that the next meeting is going to be a pause, and then soon after that, there's going to be a cut. However, there's no commitment. He just said we have to continue looking at the data. So that's not really too assuring to know that, hey, the pause is definitely happening. We still don't know. So what do we have to pay attention to going forward? Well, next week we have the CPI report, and that's going to tell a big story of where we're at. But then after that, we also have the PCE report, which is another inflation gauge that the Federal Reserve prefers to look at when it comes to looking at inflation. And those two reports right there will give us a better indication of whether or not a pause is actually happening. See, one of the things I constantly tell, the Push and Profit private group is, hey, we want to stay data driven, and we don't want to listen to what any politician says or anyone in this sector of the government, because, people say things all the time.
Politicians are just bandits and criminals.
Now, so far in 2023, we already had 3 banks fail. Now, according to Bloomberg, over 128 different financial institutions are feeling distress. And just to put that into perspective, back in the big financial crisis of 2008, we had 25 banks fail. So we potentially could have something that's 5 times worse than 2008, which is pretty scary. Now, something else that also makes everything very difficult for regional banks is that the regional banks, in order to prevent their, banks from failing, they kind of need assistance. But the problem is, the minute a bank kind of comes out and says, hey, we kind of just need a little bit of help, everyone kind of comes out with their shotgun and, pretty much just shoots them down, where we have this big fear that, hey, if they're asking for help, they're on the brink of failing, which causes 2 things: the stock to fall down and a bunch of depositors to flee, which causes a cycle of things actually getting worse when these banks, all they want is just a little bit more help before things get worse. So it kind of is the situation where banks that need help can't even ask for help because it actually makes things worse. So it's a bit of a tricky scenario. So it's going to be pretty interesting going forward into 2023, especially because the rate hike that we just had yesterday hasn't even been felt into the market. These things take time. In fact, a few of the rate hikes from previous times have really yet to be felt into the market. So it's going to be very interesting. So if you have exposure to regional banks in your long-term portfolio, well, this may be the time where you kind of want to scale out of those, right? Because it's kind of a dangerous area, holding into these regional bank stocks, right? As I said, it's a vicious cycle because they need help, but if they ask for help, well, then it actually looks bad, and then they really need help, right? So it's really crazy. But with that being said, guys, make sure to check out the links in the description below, because there is a link for the Push and Profit private group. There is a large coupon, probably one of the largest coupons we ever had. And also, if you're not interested in the Push and Profit private group, we also have a free newsletter, a weekly newsletter. It's free to sign up, that I send every single week, so you guys could get updated on what's happening in the overall markets. So definitely check out the links in the description below. And with that being said, guys, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.